Anmol Singh, thank you so much for coming on the Inner Edison Podcast. How you doing today?
Doing great. Looking forward to chatting with you. How are you?
Good. Before our mics were hot, you told me you're in New York. Is that what you said?
Yeah, I'm right in downtown financial district.
So you must be a trader or
That
do
is
something
correct.
along that
Yes.
lines.
Yeah.
Yes. Because why else would you live there?
Yeah. Honestly, I don't even need to live here. I mean, because most of my work's online, but I guess it was one of those things. You're in this business, might as well move here,
Yeah. How long have you been in the business?
14 years, started in 2010, and been doing that ever since.
And how long you been in New York? 2010?
New York 2015. So 2015
Okay.
moved to New York. Used to live out in Long Island before, as far as where I live now in downtown. Moved out in 2020. So,
How come you don't have a Long Island accent then?
well, I mean, I'm born in India. My accent's all over the place. It's like it's a combination of living in India, London, New York. So I've kind of been bouncing around. A few years here, a few years there. But
All right. So
thank God I don't have a Long Island accent, by the way.
just, I don't know. There's a couple of those young guys from New York that's TikTok that's taking over because their accent talking about the inflation. They're doing really well.
Yeah.
They've been on Fox News a few times.
Nice.
So it's just but all right. So you're born in India, I assume.
Yes, that's
Right.
correct.
And what made you want to come this way?
I think it was
Or I
like,
should say, leave India. How about that? Yeah.
yeah. I mean, for leaving India, I always wanted to leave because I just felt like there's more for me out there. Never really felt like I belonged or fit in there. And there's also like growing up, you see images of New York, right? You see all these buildings, you see all this amazing stuff. So I always used to be like, okay, I want to move there once I, can become successful or grow up in there. And I used to have it on like above my monitors when I used to play Xbox before. I used to have like images of New York City. So it was just one of those things where you just put it in your mind, and I don't even know why I wanted it, but I wanted it and I made it happen. So I think that's what it's all about.
But you went from what you just said. You went from there to London. How long
Yeah.
did you live in London?
About 5 years there. So from 2010 to 15, I was there, and then from 15 to now, I'm in New York.
Is that normally a stop along the way for most people?
No, I went
'Cause
to
I know.
college there. I went to
Okay.
university there, and I couldn't get in here because America had like SATs and some weird requirements. So I was like, all right, let me just
You
find a
just
way.
had to wait. You just had to wait till a few years ago. They got
Yeah,
rid of all those requirements.
I know. Now you could just cross the border and you're here.
Oh man, you sound like American.
That's what it is. Because I came here the right way. I put in so much
I-
money and time and
and
effort.
that's what people don't understand.
Yeah.
So the lazy Americans, which I am part of, unfortunately now, my grandparents came from France the right way, and the family came the right way. And the people who are most upset about what's happening are the ones who came the right way to be
Absolutely.
in America, where other people can just run across the border and now here's $3,500 a month and go here, never have to be seen again. And this is not supposed to be a political, show, but that is what's messed up. So I'm in the mortgage industry. The current administration, and I don't care if it was Republican or a Democrat or whoever the administration is, but the moment you get in and you sign a thing to get rid of a pipeline to start the inflation process, it has caused my industry to go up 5% in an interest rate. Typically, yes, we go up. It doesn't always stay down. We're never usually that low. That was a pandemic who caused the rates to go so low because we all thought we were going to die. And that's why rates were where they're at. And we expect them to go up. But no one expected it to go up in the 6-month period by 5%. Normally, and I'm only bringing this up because you're in kind of an industry that focuses on this kind of stuff too. Did you think the the 5-year and the T-bills, the 1-year T-bills are going to be close to 5%? You can put your money short term and get so much money back. That's unheard of.
Right. I mean, they just gave away so much money during COVID and all this stuff. And then you add on top so many different factors that it was just bloated. And I mean, I almost think they had to pull Volcker, kind of like pull the Band-Aid off and really go for it. Because you're still haven't solved the issue. Even after raising all these interest rates, we haven't solved anything at all.
Because, I always say, in order for people to be on a budget, you have to have mom and dad on the budget. If only mom's on the budget and dad's not, it doesn't work. Right. And if you look now, you got Biden and you have the Fed. Okay, they're trying to work together. Well, one's not working with the other one at all. They're still spending. And if we keep spending the way we're doing, that's why we're going to continue to go down the same way we're going.
Exactly, 100%.
And that's the problem, because you're right. They needed to raise short-term interest rates, But I was talking mortgage rates. Mortgage rates aren't affected by the Fed.
Right.
They're affected when the Fed doesn't do something. Right. That's for so long. They told us, oh, no, this is not going to stay. This is not how it's going to be. It's going to go away real quick. And that didn't happen. And the mortgage industry is like, the mortgage-backed securities and all that's like, this is BS. We know this is wrong. And they went up faster than anything else.
Yeah, absolutely, man.
Yeah. But if the Fed would have raised short-term interest rates sooner, we wouldn't have seen such a drastic increase in, I think, the mortgages I deal with.
Right.
We normally in the past, the max we've seen is a 2% over a short period of time. We have to go back to the 70s, and this is what we'll get some questions to you in a second. But we're back close to the 70s right now. We have inflation, we have low wages, right? Or high wages, I'm sorry, and low unemployment. That's what we had in the 70s, right before it got really bad, and into the 80s where we saw 21% interest rates and other stuff. So we're at a tipping point that if we don't make changes, that we're going to see things get worse. What do you see in your industry? Because you're in a totally different. So I'm in the interest rate industry. You're in a totally different industry.
Yeah. So for us, it's like stocks have just been continuing to go up, but it's like nothing feels right. Meaning, majority of the stocks are still sitting down here, but the 7 big stocks like Microsoft, Google's, Amazon, they're causing the entire market to look like, okay, we're doing great, we're at all-time high, but majority of the stocks aren't participating in this market rally. And now they're talking about cutting interest rates twice before the end of the year. So 2 cuts before the end of the rate cuts before the end of the year. But doing that when the stock market's at an all-time high, they're probably going to create a situation where we're going to capitulate. We're going to run up to the upside, and then the pullback is going to be nasty. I think that's what we're looking at, because typically you get a recession 11 months after you first raise interest rates. So we did that last year in September. So August of this year is typically where that might be hitting. And typically markets have declined in October. So that August to October period is going to be very tricky for investors. I mean, I'm personally in a boat of, okay, let's start taking out on some cash. Let's start buying some gold. Let's start doing a lot of those kind of things, because I just don't want to stick around before the pre-election dip that might happen, because that might be ugly. And so for me, it's just sitting on the sidelines and see what happens in 2024 to try to get back in.
Yeah. And see, I don't see any rate cuts at all this year. I actually see the potential for one more.
Right.
That's just my take on it, because I see it differently. I see with the numbers I look at, and if you get into the wages and the ADP and all those different things, BLS reports, all the stuff I look at, I don't think the employment is exactly where people think it's at, right? Our numbers are so low, but they only count people on unemployment who are actively seeking work.
Yeah.
7.3 million, because that's probably where we're at right now by the time this comes out, 7.3 million migrants coming across our border is added to. They're not looking for work.
Right.
The homeless people aren't looking for work. The quiet guys who quit working, the 3.5 million that just said, I'm not going to go to work anymore, and they sit at home, those guys, and I'm talking guys, not females, but guys, they're not counted. So truly, if everybody was counted, that unemployment rate would be so much higher, and you would see so many different things happen.
I agree with that 100%. The data is just like not reliable in this, at least administration. Is like anything you read or look at the data, there's always these little caveats. This doesn't account for this. This doesn't account for that. All these little bullet points that, inflation is low because we don't count food. We don't count any of that now. I mean, so if you start looking into how that's calculated, they're really finagling the data. And so nothing can be trusted right now. And that's why if there is a rate hike, as you're talking about, I mean, it's not going to be pretty because the market's factoring in a cut. So that's why it's been going up all year, right? And in anticipation of that cut. So if there is actually a raise, then that's what's going to be that moment that I'm talking about in August to October timeframe, which is going to be nasty. I think September's meeting will decide that.
Right. But I'm looking at recently where the 10-year has been going up recently because of all these numbers are coming out going, what? That's not exactly what we thought was going to happen. But you're right. They changed the true inflation rate of how to calculate the inflation back in the 70s or 80s. And then recently, now they're going, okay, well, if we don't include so they took housing out and they put in the rental payment.
Right.
Right. So that doesn't go up as much as a house goes up. So it makes a totally different number. And if you don't know these things, government manipulates certain things to make it sound better. And I'm talking all governments. This one's a little bit worse, but they just don't want to stop spending. They want to put all these social programs in place so they can never be taken away.
Absolutely.
That's what they're doing.
Yep. 100%.
Yeah. And they're trying to get themselves another voting base by letting everybody come in. I mean, it's horrible. That whole podcast wasn't supposed to be talking about this, but it was supposed to be about you and your business and everything. But these things mess with if you're investing, right? Anytime there's a situation that might be bad for one industry, it's an opportunity for somebody else. And that's what we have. There's still opportunity here. I'm in the mortgage industry, and people aren't buying houses because they're afraid because rates are so high. Well, investors are buying them because they know people have to live somewhere, and we're not building. And here's an example. In California alone, we need to build 250,000 homes a year here. In the last 10 years, we were lucky to build 120,000 a year. And last year, we only built 70,000.
Right. Wow.
So we're almost 3 million short in California, and we don't have enough people leaving to offset that number.
Right. Yeah. I mean, I've been on Zillow too. I've been like looking to move from New York to Dallas and trying to make that move. But I think, it is late than obviously before, but I still feel that there's a lot more coming to that side. It depends on how this year, what happens in November, but I think there's still a lot of potential there. Maybe not for appreciation, but as a cost of living, the businesses are moving there. As an investor, if you're getting into like multifamily or even getting into, let's say, apartments, because that's what's being built up in Dallas right now. The skyline's being built up again.
Just be careful of the property tax.
Yeah,
a lot of people don't realize that. So in Texas, so in California, we have 1 in 8 to 1 1/4, depending on where you are, whether you have Melrose and all the other stuff could be a little bit higher. In Texas, it's 3%. But on a primary residence, whatever your value goes up each year, it can go up. It can take 10% of that and add to your tax base. So every 10 years, your taxes double.
Right.
In California, we can only do 3% of that. So we take 30 plus years to double the taxes if they ever get close to that.
Right.
On an investment property in California, it's the same thing. It's the same as if you live there. In Texas, a rental, there is no cap. So what people didn't realize, and that's why Austin, Texas had so many Airbnbs going back on the market, is people bought them for 250,000. Now they're worth 500 and their tax base doubled. And they're like, I can't afford this. It doesn't work. And so just be careful with taxes. I mean, with Texas and taxes is all I'm saying. And the problem you have in Florida is the insurance. The insurance is the highest in the nation. The average is. So you have to run all the numbers before you make that move. I understand why you want to do it, because New York is like San Francisco. It's not the same that it used to be because of the politics. We need to get the politics out and get back to law and order. Period.
Right. Yeah, absolutely. Because I mean, I had a horrible experience owning properties in New York where tenants wouldn't pay and you can't even do anything. Court dates next year. So for the whole year, you can't even kick them out. I mean, all those stuff that happened that I was just like, all right, I'm done with New York pretty much.
Right. Well, I know a lot of people in the whole industry because of what I do, Bigger Pockets, and everybody's connected to that, and all the different guys who are doing this stuff. I know them, and they stay out of California. They stay out of those areas. They stay out of any state that has potential, any type of rental restrictions, right? Or will impose those. They go to everywhere else and buy everything else. And that's something you have to look at. And I have one guy we had on, he says, I don't look at the state anymore. I look at the county, what color the county is.
Okay.
And I'm talking about the color, whether it's red or blue. Let's be clear there, because I don't need anybody sending me things saying you're racist.
Yeah, I got it.
and he's like, because it's a total different night and day difference between those two counties, how they look at things.
Right. Yeah, that is true. For sure.
And it's sad. It should just be the same. We're almost all in the middle. There's just those fringes on the outside that it shouldn't be the way that it is, but they can control when we are at each other's throats.
Right. Yeah. And I'm seeing that in my industry with Tesla, like that's one of my biggest stock holdings recently. And, it's been getting taken to the woodshed because a lot of the hedge fund managers don't want to touch it because of the tweets he's making and all of that. So because of that, the stock's been getting crushed, and so it does affect those little fringes. Actually, end up affecting a lot because it's the loudest people. That's basically the thing.
It's that ridiculous lady in the bar that you're so loud, she's got to get all the attention. That's what that is. Yeah. And I don't mean to pick on ladies, but we all know what I'm talking about. There's always the one that's really loud in the bar that's trying to get all the attention.
Yeah, the Karen.
You said it. I did not. I apologize for any Karens out there that he had said that. I apologize. So what do you see going forward with, you do a lot of, besides getting people in the market. Bear with me here. I apologize about that. All right. So we were talking about, what do you see going on now? What do you do with your industry? Are you training people? What are you doing?
Yeah. So I personally, for myself, I trade the stock market and invest in stocks, both long-term as well as short-term trading. And then I have, real estate. I have some Airbnbs. That's kind of what I do for a living. And then at livetraders.com is where I have an academy where we teach other people how to get involved with the stock market, whether they want to be a trader, investor. So we have in the publishing business, we have newsletters that go out regarding the markets as well. So that's probably the main thing that I do. And I wrote a book. It's called Prepping for Success.
What's the name of the book?
Prepping for Success. 10
And what's that involved? Prepping for Success.
So that book has nothing to do with trading or investing. It's just everything that I've learned over my career that's got me to where I am. So all the things that I've learned in my personal development journey and my business journey and things that bring me success. So basically success tips, 10 keys for making it in life.
And is that on Amazon?
Amazon, Audibles, iTunes, Barnes & Nobles, Walmart, wherever you buy your books.
All right. So I'm going to go back to what you said. So basically you're diversified in multiple situations, right? I assume your Airbnbs are not in New York.
No, the majority of them are in India. We got one in London.
Wow. See, that is something totally different because most of the people I know are in the United States. They're not or in Mexico. So how does India work? Is it the same as everywhere else when it comes to that kind of stuff? Or
well, for me, it's actually pretty good. Because we have given away to management companies, and they guarantee like a fixed rate. So they're like, okay, this is what you're gonna get a month. Anything over we make, they keep, right? So we have a fixed income, which gives me a lot of predictability. And okay, it's not about me going on Airbnbs and listing it and having taken care of all of that. We get a fixed rent per property, which is a good return in my opinion. It comes about 8 to 10%. So we're getting that as rental income. Anything more than that, they get to keep, and we don't have to touch it, manage it, or anything like that.
Well, I guess so. It's almost kind of like a syndication, but I mean, it's not, but it is. I mean, because with syndications, you give them more money, and then they give you dividends, and then at the end, when they're done, they sell it, and you get the profit, and you get your money back.
Yeah. So in this case, we bought the properties outright, and then we give it over to the management companies to do their work.
And how long do you give it to them for? Like, is it a period of time?
Yeah, so we have to have at least a minimum 2-year contract, and then anything over that they can extend. But within those 2 years, we're guaranteed that rent every month. So which is the great part about that. A lot of our properties are near the beach, or they're beach villas or that, so they're all pretty much always rented. So there's no problems in that department, because the place where we own it in Goa, India, is very touristy. It's a tourist spot. It's a beach town. So that's kind of the hottest spot where everybody would escape to from India or in India. So yeah.
Gotcha. But also you have a niche of the fact that you are that nationality and you're from there, not
correct.
From
yes.
town,
Yeah.
But yeah. So you have access. It's kind of like when you have people from Mexico who tell everybody, hey, you buy all this stuff down here and this is what we'll do for you and everything, because that's where they're at. And so how is London when it comes to it? Are they pro Airbnb kind of things, or are they?
So London, we have it actually like just a proper rental. So we're leasing it to tenants. So it's not really Airbnb. It's not short-term rental. It's just been rented out. We have the same tenant for the last like 5 years now. So that's just one of those collect the rental checks. No problems there. It's been a solid property, but we also bought it like in 2010. So at this point,
when you were going to school, you had it.
Yeah. So since 2010 to now, it's like paid for itself several times over. And now it's just, free property at this point.
And you're probably going, oh, he actually listens to what I said.
Yeah.
That's what I do. I just apologize for the camera issue.
Right.
Yeah. I don't know what happened. It's occasionally on this one. So because a lot of people are afraid to do Airbnb, purchase properties, do that whole thing because they've heard so many stories about how certain areas, like I'm in California, Tahoe's like, get rid of them. We don't want them. And that's because people didn't respect when they were there. They was like party town. No, this is not what this is. This is, you don't have 5 families go into a house and then have a huge party because that's what happens.
Right.
Away. But because I'm just doing a property in a totally different place, and their mortgage, it would be probably $3,000 a month, but they can, for short-term rental, they can make $50,000 a year.
Right.
So if they do, and that's doing a couple hundred days a year. You still have time that you have it, but you can make so much to offset your mortgage payment eventually, and someday pay that off.
Yeah, and I think that fear is in every business. Like I think people analyze things way too much before actually getting started. So either you get started or you meet somebody who's already doing it, and just kind of cut that short process. I think people spend a lot of time online, like researching, dabbling, and then now you just have a lot more information and conflicting information because somebody's struggled, somebody succeeded, and now you just end up never making any decision, never getting started. And that's the same thing with trading and investing. Most people never get started. I think the best way is either just to get started, learn as you go, or find somebody who's doing what you want to do, and then just cut that learning curve.
And that's where you have a training school for that, right?
Yeah, for traders and investors. Yeah, but I think that's one of the things I wrote about in my book is like stop analyzing stuff too much. I think people talk themselves out of it, basically, of starting, whereas everything I've done in my life is starting, failing, figuring it out, and, going along the way.
Yeah, but you're also in that industry.
Yeah, but I wasn't always this way. I mean, I started trading and I was in my dorm room, in college.
I know, but again, you're in that industry. That's like me with mortgages. It's no big deal about all this stuff and whether or not people can qualify. I can tell you in 2 seconds where people are so nervous about it. And when people come to me who think they can't, they are the ones who can. And the ones who think they can are the ones usually they can't. So it's I mean, because they come to you and they're like, okay, I have $100,000 to put down. I make $300,000 a year, and I have a 800 FICO score. Can I buy? You know what I mean? Where you have the complete opposite, a third of all that, and they think they can. How is it with trading? It's just people are afraid to actually lose money. Is that what you think the biggest thing?
That, or there's a lot of online statistics, obviously, most traders fail and all those things, and they focus on the negative. But I'm like, that's with any sport, right? I mean, do you never play any sport because you're never going to make it to the team? Because only small people make it. So it's all about like what you're focusing on. Are you focusing on the people that are not going to make it, or are you going to focus on examples that are going to make it? So trading is just like any other performance sport. Yeah, not everybody's going to make it, but you got to try to make it. If you never get started, you're never going to make it. I mean, that's just pretty much a fact. So I think that's what I'm trying to tell people is like, get started. If you fail, great. At least you can move on from it quickly and move on to the next thing, rather than spending years analyzing something and you never doing it. And then maybe after 5 years, you get the confidence to do it. And then you realize it's not for you. So might as well realize that, cut that process short and learn it quicker if it's for you or not for you.
How much would you tell somebody to put into real estate versus the stock market or something like that?
For me, I prefer the stock market a lot more just because it's liquid,
really?
Right? Yeah. I mean, at any given time, I could get out. But I also say that because to buy the real estate, where did I get the money from for my trading, right? So I always have that love for trading because if I never got involved with trading investing, I wouldn't have had the money to buy the real estate. So for me, I made that money from the stock market, and then you park it. Yeah, real estate is a great vehicle to park your money in. And I 100% agree with that. And that's why majority of my safer investments, when I make a little bit of money in the stock market, I park it quickly, buy a property or something to park my money in. But I think initially I made that money from trading, and trading is a way where somebody, if they have if they can go through the learning curve, which is a little tricky in the first year, probably don't expect to make any money with trading in your first year. But if you can get through that learning curve, you could become something kind of from nothing, right? Whereas with real estate, you still actually have to have that cash in the first place to buy or maintain the property and to be able to pay taxes for it.
Right. But the difference is in the stock market, if I want to buy $200,000 worth of stock, I have to have $200,000 to do that. If I want to buy $200,000 in real estate, I have to have 3% down, 5% down. It's depending on how you're going to live there. That's the difference for me, was that it's the leverage that you can do. The house appreciates at the same value, whether you pay cash for it or whether you leverage it.
Yeah, there's certain brokers. I mean, depends on short-term trading. So brokers offer 4-to-1 for a leverage for day trading. So you could from $10,000 you could buy up to $40,000 worth of stock. Right. And then if you join a prop firm, which is where I started my career, and a prop firm would give you 100-to-1 leverage. So I had $10,000 with them, but they would give me millions of, hundreds of thousands, millions of dollars to actually trade with. I could still only lose what I paid. So if I lose what I put in, then I can't trade anymore, but I still had 100-to-1 leverage. And I think that leverage allowed me to kind of catapult faster. So there's leverage out there, but yeah, it's not for the day-to-day person. You have to have licenses and all of those stuff.
Right, because you can lose everything that you put in there.
Yeah, most
when the market,
yeah,
because I've been around, and I've saw when day traded first came out back in the 90s, and how many people were doing this, and then they, it's like everything, right? Yeah. You have to long term put in the time, understand what you're doing, and you grow from there. And that's what's pretty much what I'm hearing from you is start investing. Over time, you'll learn what to do, and if you don't want to do it yourself, hire somebody else to do it for you.
Right. Yeah. I mean, and
hire an expert.
When it comes to investing, you don't even have to hire anybody for investing. Put it in the S&P 500, put it in the NASDAQ. That outperforms 90% of the hedge funds out there. Most of these hedge funds just try to collect fees, and their goal is to make you think that you need an expert, give us your money as a hedge fund manager, while they actually underperform if you just bought the NASDAQ or S&P on its own. So for 99% of the people, that will be the right approach. Just invest. Take percentage, 10% of your income or whatever every month, automatically invest in it. Never look at it. Even though we'll get those declines and crashes, the stock market has always been higher every 10 years than it was the prior 10 years. So just by knowing that, you're able to ride off the waves. So that'll be great for investing. And yeah, when it comes to trading is like a sport. Like there is a learning curve. You have to learn it. You need to know what you're doing. Otherwise, you're going to be one of those statistics that ended up going on tilt like those poker players. And then people end up blowing up and losing all that money because they want to get rich quick, which does not work in trading. Get rich quick does not exist, right? It took me a long time. I lost money my whole first year trading. Not until year 2 or year 3 is when I actually started making any money.
So, and you're in it.
Yeah.
I mean, that was when you're in college, right?
Right. Yeah.
Yeah. But now you're in it and you know what you're doing. So, and it's but you've done it over time now. You've had years of training and understanding what the market does. And I think everybody needs to understand what the market does, because they also need to understand what things that our government do that will mess with what their investment does and will mess with how everything goes forward. Because if you don't understand that, you don't get what they're doing. And I don't mean that like conspiracy theory kind of thing. I'm just saying what they do and how much they spend and certain things will affect your livelihood to a certain point where you never knew it would.
Yeah. And I would say go to the conspiracy theories, because it's majority of them end up becoming true. That's one of the things with at least last few years with me is like all these things you think were, no, government's never going to do that. And you're like, they actually do. Like, how is it that Nancy Pelosi is the world's best trader? Right? She just made $4 million on an NVIDIA trade on a $200,000 salary right before they announced the thing. So
she's done that since the 90s. She had she got founders shares of Visa before, and she kept everything that was going to come on the floor, against them from coming on the floor as Speaker of the House.
Absolutely.
But look at
happen. These things are very real.
Yeah. I mean, when you look at AOC, she was a broke bartender and now she's worth $20 million.
There you go. I'm in the wrong business.
Yeah, we all are. And that's the problem is people, there's only one person who was in the government who lost money, and what, I look at the whole thing with, I don't care if you loved him or hate him, Donald Trump. I liked a lot of his policies. I didn't like him as a person, but I don't care. I don't have to like my president, but I have to like their policies. I don't like the current one, but his, he said, let's get rid of TikTok. And everybody called him a racist, xenophobish, all this stuff. And he's like, no, no, he's wrong. Just because he's wrong. And now they're all trying to do it.
Right. Then that's the thing. And I agree with you. You don't need to like your president or your politicians. They're servants. They're serving our country. They're serving us. And you don't need to like him or, be a personality type of person. It's just like, hey, are you doing a good job? Or are you not doing a good job? And I think that's the measure that people should be judging politicians by.
Right. We don't need someone to take our money and then tell us how to use it.
Right. Exactly. Yeah.
And that's a problem. And, I was talking to a guy, I had a guy on the show and he's from Dubai and he was like, oh, I moved here because there was no tax. Well, now we have 9% tax for corporate. He's
Oh,
like,
they did? Oh, wow. I didn't know that.
Yeah, now they do. And he's like, but no personal tax. So,
right.
But here, I mean, depending on where you're, it could be up to 28% for corporate tax.
Yeah.
That's a lot of money. People don't get it. I mean, that's a lot of money to give to the government to do programs, and then they spend it and they don't care if you like it or not. Right.
Right. Yeah. Well, we have to get the money somehow to give to other countries. So, we just tax our own people.
Yeah, that was the funniest thing Trump ever said in 2010. I hope we don't find life on other planets because we'll send money to them.
Yeah, I remember that. That was funny.
Yeah. All right. Anmol, thank you for coming on the show today. Sorry about the technical issues.
Oh, all good. Thanks for having me.
I appreciate it. And again, what's your book? Again, that's on Amazon?
Yeah, it's called Prepping for Success, 10 Keys for Making It in Life. If you're interested in audios, then it's on Audible and iTunes. But if you want to read it, then it's on Amazon, Barnes & Noble's Prepping for Success.
Well, at least you did is it your own voice?
So I have a narrator who did the audiobook, but then at the end of every chapter, I come on and I give my 5 minutes on it. So we get a best of both worlds.
That's good. Because I like the actual author because, sometimes the author's tone and how they talk. And then all of a sudden you have this person talking and it's like, okay, this is wrong.
Yeah. I hear you. I try to find somebody who can, kind of speak similar to me. But then I was like, you know what? I do agree about having audio because I enjoy when authors read audiobooks too. So I said, okay, at every chapter, at the end of it, I'll come in and I'll give my summary of that chapter. So you get best of both worlds. Because I just didn't want to be in a studio and, reading it line by line. I just not me.
It's not a studio. It's a box.
Yeah, exactly.
It's not even a studio. It's a box that you're sitting in. Yeah,
exactly.
Yeah, because my book came out 2 Februaries ago, Financial Freedom, Building Personal Wealth Through Home Ownership. And to do the, and they're like, okay, well, you just do the video, do everything at one time, and, we'll do and I didn't do the Audible because I don't want to sit in that little thing.
Right. I agree. Yeah.
Yeah. All right. Thank you so much for coming on the show. I really appreciate it. If somebody wants to find you, what's the best way to find you?
Best ways would be Twitter or Instagram. My username on both of those is Delta90, DELTA99ETY. Don't ask me why. I had it a long time ago. They never changed it. But Instagram and Twitter is where I'm the most active. And if you're interested in learning more about trading, then livetraders.com is the resource to get started in.
All right. That was livetraders.com. Okay.
That is correct. Thank you.
All right. Anmol Singh, thank you so much for coming on the show today. Really appreciate you having you here.
Great chatting with you.